With us today, Emily Reid is Head of Commercial and Retail Banking at the law firm Hogan Lovells. We have Imran Gulamhuseinwala, a partner at EY, and Rhydian Lewis, co-founder at Ratesetter. And Rhydian, you are the sole representative here on the entrepreneur startup side, so we'll get your views in a minute. But Imran, I really want to kick off with you. We've just heard the FCA give their view of the regulatory environment here. You've been taking a closer look globally at what works when it comes to regulations, fostering innovation, fostering the fintech environment. What are the key takeaways that you found?
Yeah, thank you very much. So I and my team are the ones that wrote the report for HMT on benchmarking fintech internationally. Specifically, we're trying to understand and quantify, if you like, where the UK sat with regard to the strength and health of its fintech ecosystem versus some of our peers globally. And when we did that piece of report, obviously we thought about regulation, but really what we did is we thought about regulation in the wider context, and we saw that there were essentially 4 key levers. We've talked about talent earlier on in the session today, capital, but policy as well as demand. Policy in particular was a very important driver for us. And within policy, we look at government policy, and actually I thought it was really interesting, some of the things that the EST mentioned earlier today and how they're beginning to think about the recommendations we made in the report, how they're planning on taking it forward. But within policy, you've obviously got government policy, you've got tax policy, but actually probably the most important factor when we looked at all the different fintech ecosystems was regulation. So I'm really pleased to hear about some of the things that Chris has been talking about earlier today. When we think about regulation, it really did, and when we benchmarked the regulatory environment against some of these different fintech ecosystems, I think for the first time what we did is we wrote down what many of the people actually in this room already believe, which is that the UK regulatory environment is very welcoming of fintechs. And a few of the reasons really came through in the report that we did. I think most of it actually down to culture. What we have is a regulator that listens, and a regulator that listens and can actually engage in dialogue with the fintechs. It so happens that the initiative that the guys created was Project Innovate, which we think has been incredibly successful. And when we looked around the world, we didn't find anything really similar to that in some of the different geographies. And the 2 things holding that back were really actually culture. And we think that the regulator in the UK has a very different and broad culture. Innovation is essentially one of its mandates. And then also the cost. So actually, servicing a large number, a long tail of small fintechs, some of whom have got great ideas and others not so great, is costly and it's difficult to do. So we thought that the UK regulator had really stepped ahead of the competition. However, we did see that the competition was closing, particularly in the Asia markets, where we saw that actually regulators and policymakers tend to be a lot closer to begin with and actually have a lot more money, and I mean real money, that they can put behind some of these things. So actually maintaining that leadership role in the regulatory environment is really, really important. The Reg Sandbox is great. The Reg Tech initiative is great. And I'm really pleased to hear that we're actually in the UK beginning to implement and create some of those ideas around, turn the ideas from concepts into real implementation, because it's hard and it will be risky.
And Christopher, is that something that the FCA is watching when we talk about the global regulators becoming more progressive, more open to fintech there, and what kind of competitive threat that presents to the UK?
So I think our motivation starts from the point of view of, can we get competition into the UK financial services market? So we're not particularly fussy about where that comes from, as long as people meet our standards. And so we're quite welcoming of how do we get more international firms into the UK, as well as strong UK firms as well. When it comes to the question of thinking about this across boundaries, though, I think one of the things we've learned early on from Project Innovate is we started with the assumption, as many regulators do, that having been authorised to have one particular kind of business line, firms would then want to grow within the UK by adding further business lines. Actually, in the fintech world, largely that's not been the case in the experience we've had. What people want to do is to say, I want to get to scale, I want to be competitive by taking the one idea and then taking it from the UK into Europe, into the States, into Far East, wherever it might be. And so one of the reasons why we've started to sign this series of partnership agreements, the first of which we have with the Australians, is saying, how do we help firms take some of that friction out of transferring across borders and actually grow to some sort of scale. So I don't think we see that as a particular threat from our perspective. Actually, in many ways, we welcome the fact that we're going to get more of a thriving international community here.
And perhaps have more of a standard globally. Yeah. Rhydian, interesting enough, we were discussing the very issue of scale for your business backstage. You've gone to Australia, but you're yet to expand across Europe. Are regulatory barriers to entry one of the reasons behind that?
Well, it certainly was actually the case. There was a regulatory barrier in Australia, and one of the attractions of our Australian partners to partner with us, Ratesetter, is they saw that we had made progress with regulation in the UK, and they were keen to attach themselves to us. And that made the regulator in Australia much more confident and much happier to give them the license they were looking for. So, I mean, Ratesetter Australia is the only peer-to-peer lending platform in Australia that is able to take retail money. And they looked at the UK and saw how that had occurred, and that gave them confidence. Across other, I mean, Europe is an obvious place to expand. It's not quite there yet, is the honest truth, because of it all comes down to the sort of credit legislation, which is still at a country-by-country level. But that might harmonise in due course. I think we will always look at it from a business angle first, which is to say, are we really committed to going into that country? And we are just focused at the moment on building and getting to scale in the UK, which I think we're beginning to get there, but we're still a couple of years away from the impact we want to make.
And Emily, from the companies you work with, you work quite extensively with the fintech community here in the UK. Do you think they agree that the policy environment, the regulatory environment here is still nurturing their growth, or would they like to see more done?
I think there's very positive sentiment towards what the UK government is doing and what the FCA is doing. But I think it was Nick Hungerford earlier was saying that the reason why he moved his business from California to the UK to launch it was because of legal and regulatory challenges in the US in particular. I just don't think we can underestimate those challenges in the UK still. The most important thing is to have a clear policy objective to facilitate fintech. But the clients we're seeing, startups, scale-ups, are still finding the regulatory regime pretty challenging. And I think that one of the messages coming out of the EY report, and as you said, we couldn't really hear backstage all these really important messages which were being delivered to you, but I think the gist was the sandbox idea is going to be taken forward sort of actively, and the UK government was putting more sort of resource and support behind the fintech industry broadly. And that is great, but it doesn't immediately translate into creating an easy environment for startups and scale-ups to operate in. And I think one thing on the sandbox idea is a lot of our clients are actually not doing something innovative. They're doing something quite traditional, but in a new way. Yeah. And so I don't think the sandbox isn't really going to help them enormously. And that's a huge proportion of startups and scale-ups.
That's a really interesting point you make, and I wonder that relative to other sectors in tech, other divisions of tech, if you will, whether or not the financial firms have the chance to really scale and grow to the extent that other tech groups do. I mean, there's been so much talk about an Uber moment for the financial sector, but is that possible given the regulatory headwinds they still face?
Well, I mean, I'd echo some of those thoughts, which is it's very difficult to move from poetry to prose, as Obama called it, with regard to the government saying we want to be leaders in fintech, but the reality of the sort of coalface in the case of the companies, but also as a regulator, is to actually turn that into reality and to make sure that you've ticked off all the things you have to consider. That is a difficult journey, and it's a journey that we're going on at the moment. I'm sure we'll get there, but it requires subtlety and a lot of work. I mean, I think the UK is interesting because on the one hand, it does want to be kind of trailblazing in its adoption of fintech, but at the same time, it has a bigger incumbent financial services industry than most countries. And again, that makes it challenging because you've got rules written for very, very big industries. And naturally, those rules expand to being absolutely vast, too big. I mean, we all know that. But you have to work through that. And it's interesting that looking at some sort of developing countries and emerging markets, or developing countries, because they don't have such large incumbent industries and large incumbent regulation, they're just sort of kind of skipping and leapfrogging.
If you look at China, for instance.
China,
payments, P2P,
it's not an innovation, it just goes to a completely different level. I think it's complicated in the UK because of the fact that we have such a strong legal basis and such a strong regulatory basis, makes innovation, whatever the intention and desire of government, still a challenge, and one needs to just work through it.
Well, on that note, would the FCA prefer to see the banks, the incumbents, kind of absorb these innovators rather than see the disruptors go it alone?
So I think we'll see lots of different models emerge. So of those who have come through Project Innovate, who knows? There may be the next 2, 3 really, really big players are going to grow out of there and do so through some kind of natural evolution. I suspect most of the businesses that are in Innovate have a business model and a business plan that says at some point I will exit and I want to sell on to someone, and that could be one of the big guys, or it could be one of my potential rivals at the moment, or whatever it might be. And I think we shouldn't be too prescriptive about what kinds of innovation we want to see here. What we want is to get that disruption so that, if you do have larger players either buying these firms or aping the technologies that they're using or the ways that they're dealing with their customers, and where overall we see an improvement in competition and an improvement in how customers are served, then I think as a regulator we're pretty neutral about that. There's one thing I just wanted to come back on, which was the poetry and prose piece, which is a lovely phrase. I think there is still more we need to do there. I think we acknowledge that ourselves. One of the things we're doing this year is having more people who are beyond Project Innovate in the FCA at the authorisation stage and in the first year of supervision, who actually really do, if you like, get the innovation piece and get some of the challenges that some of these innovative firms are going to face, so that we can get far more of a seamless experience for people, rather than a lovely conversation with Project Innovate up front and then you hit hard edge regulation immediately thereafter.
Well, certainly in terms of the work that we did, there were some criticisms made of the FCA. It's probably not the right forum to make them to you now, but
I'll give it a go.
I can try it. Certainly, when we spoke to some of the fintechs, they want more resourcing behind Project Innovate, because there is still a lag in terms of getting it back, and there are still a lot of fintechs that get rejected. That seamless onboarding into the rest of the organisation, the traditional authorisation processes and systems in the FCA haven't changed a huge amount. It's great to hear that you're thinking actively around that. And then the final point, which is, fintech is about, very modular financial services, and at the moment we have a financial services conglomerate style regulator, and actually understanding all those different parts of the activity chain, building up the regulation around that, and then matching that directly to the fintechs would be really exciting.
Yeah.
Go ahead.
No, I was just going to say, in the commercial world, you all say, I don't want to go to a firm and meet the senior people, and then actually the execution gets sort of delegated down to people that, and it's the same thing in the world of regulation, and there's only so much that the regulator can put, so much resource they can dedicate to this sector, because they've got a lot of other things on their plate. So it's a complaint that happens in the commercial world as well as to the regulator.
Imran, I think you touched on something really crucial about the time factor and the potential time lag, and what that means, especially in the startup phase, because they're facing investor pressures to get this thing turned around as quickly as possible. Emily, do you think that's a frustration you see, people you work with?
Yes, I think resource generally is a big frustration. And it's not just having enough people, it's having people with the right skills and experience. And I think there's an interesting point that Imran made about perhaps needing to have more specialists focused on particular segments of the industry who really, really understand it. But I think from where we sit, there's a sort of paradigm between the regulator, who are very strong on rules, not so good sometimes on infrastructure, and we've certainly seen that in the payments industry. And then we have entrepreneurs who are very good on infrastructure and ideas, but not so good on rules. And it's bringing those two sort of divergent pieces together which is going to be critical to success, I think. And if you can do that, then I think the industry will really move forward quickly.
And sadly, we're already running out of time here, but just before we go, there, of course, are the policy and the regulatory factors that the industry knows about, but then there are the unknowns. And I would say the biggest unknown at the moment is the threat of Brexit as we get closer to the June EU referendum here. How concerned should the fintech community be about that threat?
I don't think it should be that. I don't think it should be that concerned. I think that none of the fintech industry is sufficiently at scale and hasn't built the infrastructure based on an EU superstructure. I think it might discombobulate the kind of incumbents for a number of years, allowing fintechs actually to move into that space. So I think at the moment my instinct would be they shouldn't be too worried.
For me, I think most fintechs will largely be neutral on it today. I think in the longer term, we need to make sure that we have a large market so that fintechs can scale up in, because that's fundamentally what motivates VC capital. I don't have a crystal ball, and I can't tell you if Brexit is good or bad for that. So I just don't know. But I think to Rhydian's point, Brexit will mean a lot of work for very large financial institutions, and anything that puts innovation further down the list will create more breathing room for fintechs.
I think fintechs should be concerned about Brexit. For me, it deprives them potentially of access to big markets. It damages the financial centre that London is, and it won't take any of the regulatory burden away. So I can't see any upside, and I can certainly see downside.
Christopher, perhaps you have the most
and
interesting view on this one.
You'd be delighted to know that the FCA doesn't have a position on this. It's a matter for the British people. However, I mean, the one thing I would just say is, in terms of some of the comments that were just made before we came on to Brexit, I think we do hear them. I mean, I think there's always a balance for us about where we put our resources and how we manage that and the different competing pressures on us. But I think, if there was one thing people are going to concentrate maybe in the sort of the more immediate term rather than sort of looking to the mid-term around Brexit, it's, how do we make sure we get this kind of fast turnaround? How do we get those informal steers out there, and actually how do we get a community that's going to thrive and be a real competitive challenge?
All right. Well, we can't end on a half no comment, so just very quickly, Rhydian, if you can tell us the one thing that you would like to see changed as the entrepreneur on the stage here.
I would like to see the... I'm not going to talk about the regulator. I would like society to buy into the fact, or communities to buy into the fact that you can own loans as well as equities.
Okay, something different to end our RegTech panel on. Thank you very much to everyone who participated. That's Christopher Woolard, Emily Reid, Imran Gulamhuseinwala, and Rhydian Lewis. Thank you very much.